What I thought I'd take you through today is, I guess, a big picture view of my take on the budget. I'm not going to get too much into the details. I'm going to focus on a couple of big picture issues. But what I thought I'd do in the first instance is, I guess, sort of set the scene in terms of where the Minister of Finance or the government probably felt it was in the last sort of 2 to 3 months as they're pulling together the budget. And look, to be perfectly honest, who would want to be the Minister of Finance when you look at what we've gone through over the past 6 to 12 months? Record deficit. In April, the government issued one $750 million bond tender, another $950 million bond tender. And thankfully, there was demand for those tenders, but supply ramped up pretty quickly. You've got Standards and Poor's and Fitch looking over your shoulders, an unbalanced economy. The government, the minister made reference to net external debt. Well, the statistic is we've got net external debt of 82% of GDP. It is world class. It is up there with Portugal, Ireland, Greece and Spain. And it is sort of a company that we don't exactly like to be compared to. Household sector, savings, well, that's a bit of a joke. And we've had the Freddie Mercury variety for households. They want it all and they want it now. A couple of earthquakes. You throw an election year, it's MMP. And I made the comment up in Wellington this morning that probably the only worst job in Wellington at the moment would be to be the coach of the Hurricanes. But I guess if you look at, it's fine to look at the challenges, but you've also got to look at the other side of the equation in terms of where New Zealand sort of sits. And this is where, in my personal view, the next 5 to 10 years, to be honest, they're either going to make or break New Zealand. And we need to recognise we've got some serious problems here. But if you look at New Zealand relative to a lot of countries around the globe, we're actually sitting on the winning lottery ticket. If you look at our natural water endowment, and 79,000 cubic metres per capita. China's 2,600, and here's the heads up, it's not great quality. Free trade agreements. Now, Doha is a dead duck. It's a bit of a joke. You're never going to get the Europeans, the Japanese, the Americans, they're not going to agree. What New Zealand has been pursuing for the past 20 years is that, look, we'll just go after countries one by one. So multilateral agreements, no, we're not going to get them. We'll go after these bilateral agreements. As of now, we've got FTAs that cover about 2 billion people. Under negotiation, there's another 1.8. Are we going to get those signed off immediately? No. Will we get most of those complete in the next 10 to 15 years? I'd say no. So I'd say yes. Some countries, Korea, is not going to go too far. But there's been some real progress made behind the scenes when you look at countries such as Russia, India, and the big hope there is the United States as well. Now, people tend to focus on the direct trade benefits of these linkages. But the real, or the other important channel here that I think people tend to underappreciate is things such as tourism. And a few weeks ago, there was a big Chinese airline that started flying into Auckland. 3 flights a week. That's like 1,000 people. That's 50,000 a year. Baseline tourism in New Zealand, 2 million a year. The Prime Minister meets them on the tarmac, and all of a sudden, the end of this year, they reckon they're going to be at 7 flights a week. That's 100,000 people a year. That's like another 5% to baseline tourism numbers just off that one decision. And that's where the important aspect of the whole connectedness with Asia is going to come through. It's not just about trade and services, it's about not just about trade and goods, it's about trade and services. And there is a narrow window of opportunity for New Zealand to make this big transition. In the past 20 years, we've had a record number of taxpayers as a share of the working age population. We've been in the sweet spot. We've been in the sweet spot and we've decided to borrow up to the hilt. Life gets a little bit tougher from this juncture because the working age population starts to decline over the next 10 to 20 years. Gradually, but it's still going to be declining. And that's going to put some real pressure on this economy in terms of whether we can support the social network, whether we're going to have the tax base to support some of the novel aspects that New Zealand has actually got there behind the scenes. And I guess the challenge which I've been throwing out to people for the past probably 6 months to a year is to really to get people not thinking about themselves, but really thinking about their kids. Because the decisions we're going to make as a nation, and we saw some of this in the budget in terms of being prepared to make some of the hard decisions, is not really about everybody sitting around having a nice little lunch. It's the decision in terms of what sort of environment you want to have for your kids. Because if we unlock the medium-term story for New Zealand, your kids are going to inherit a rich land. If we don't, buy a truckload of airline tickets to Australia, because that's where you're going to have to go to see your kids. What we're seeing though behind the scenes in terms of the leading economic data is very encouraging. And it's one of the reasons we've got a little bit of a springboard style expectation for the New Zealand economy in the second 6 months of the year. New Zealand tends to have 3 speeds. There's fifth, there's neutral and there's reverse. And we suspect we're going to hit fifth gear a little bit quicker latter part of this year than what people actually expect. Now it sounds a really nice story. We just need to be a little bit careful here because there's been a lot of capital stock destroyed. There's been a big hit to balance sheets. Yes, there is going to be growth that is going to be fall out of that in terms of getting back to sort of square one. The economy has still got a huge deleveraging headwind. The deleveraging headwind globally and locally is going to last for a few more years. The Minister today, in fact the government has been pretty quick to, I guess, trumpet the whole idea or role of getting fiscal policy into a firmer footing and really making savings on their behalf in terms of supporting the economy. And what we've seen over the past 3 odd years, in fact 2 years, is that when the economy went through an economic challenge, and the Quake's a classic example here, it is quite appropriate to lean on the government balance sheet. The government's got a big balance sheet, so you lean on it. And it's good policy. What we've seen generally is that leaning on the government balance sheet has allowed the private sector to get their affairs in order. So there's generally an inverse relationship between the current account deficit and the fiscal position. And the challenge over the next few years is going to be pretty simple. What happens if we're going through that process of fiscal austerity? Where is it likely to be that the current account goes? And the chart you've got up in front of you there has got the depiction in terms of Treasury's forecasts, in terms of where they think the current account is going to be 5 years out. And what we're seeing is pretty clear. Well, the current account's going to blow back out, so you're replacing public savings with private sector dis-saving. And if you look at Treasury's forecast behind the scenes, they've got net external debt for this country rising from 82 to 85% of GDP. So they've actually got an assumption we're going to go back to our habits of old. Now, personally, I struggle to see that. One, I don't think policymakers will allow it. Two, I don't think Standards and Poor's will allow it. They'll downgrade us if that's going to be the case. Yes, they gave the big tick to the budget. They still kept us on a negative outlook for our credit rating. Why? Because they don't like the current account projections. But the third reason I'm a little bit more optimistic about the household sector and people getting the message is that I really think we're starting to see a little bit more of a change in attitudes, and it's structural as opposed to cyclical. Is there parts of society out there that are not going to change? The answer is hell yes. There are still going to be farmers out there that believe it's about capital gain as opposed to cash flow. We're never going to change them. In regard to the global financial crisis, look, broadly speaking, the initial stage of the global financial crisis was it was a big private sector bank problem. That they fixed it by really shuffling the debt from the private sector to the public sector. Now, governments around the globe, a lot of them are pretty well bust. Greece, Portugal, Ireland, they cannot pay the money back. They say they can, well, the maths doesn't work. Behind the scenes, they're using new terms to describe it, terms such as restructuring. The latest one is reprofiling, which is another way of saying the bondholders are not going to get all their money back. But we're doing some ranking in terms of looking at countries around the globe, and what we do is that we look at what's called negative aspects. That's the lines down the bottom. And the lines down the bottom are things like your current account deficit, net external debt, your fiscal debt, and your fiscal balance, and the unemployment rate. Just some basic economic indicators. You rank every country, and I think there's 35 odd countries, and you get a list in terms of where you sort of stand. What you notice when you look at the unfavourable scores is that all the pigs are out to the right-hand side. What we also do is that we take off what we call the favourable characteristics. These are things like your international competitiveness, your economic flexibility, your history of political stability. These dynamics do not give you a get-out-of-jail-free card, but they give you a little bit more time in the eyes of global investors to work through your problems. What you see when you look at that list, and the net score is that one there, is that generally speaking, New Zealand comes out pretty well. Now we're in the better half of that table. The problem children are pretty much all in Europe. And there's some big countries in Europe on that list too, which I don't think people quite appreciate. The likes of France and Belgium. The United States and the UK have got some major problems. But because they've got a lot of flexibility behind the scenes, it buys them a little bit of time.